Hello, and thank you for tuning in for some more informative content. Today, we are going to be talking about tax for rental income, and more specifically, the recent tax changes that came into force with Section 24 of the Financial Act. So, to describe the tax changes, let's compare the tax rules pre the Section 24 tax changes, and then compare the tax changes of 2020. Let's consider a typical family let property that would rent at £700 per month. From experience, the typical monthly expenses that you would associate with this type of property, if bought to the 6C rules explained in a separate video, are £80 of maintenance. This is not a fixed figure, but we tend to see an average of £1,000 per annum per property for maintenance. To insure the property would be approximately £20, letting agent fees of £80, and the mortgage interest of approximately £300. This is a total expenditure of £480 and results in a total profit of £220. This £220 is the taxable sum. Therefore, if you are a 20% taxpayer, it will result in a £44 tax bill per month. And if you are a 40% taxpayer, then that would result in an £80 tax bill per month. Now let's look at the tax rules as of 2020. Let's take the same property of rental of £700 a month and the same expenses. This time you are unable to take the mortgage interest as a tax deductible expense, and therefore our taxable sum would be £520, and the tax would be determined against this figure. In this instance, the tax calculated at 20% would be £104, and at 40% would be £208. However, mortgage interest can now be claimed as a tax relief at 20%. Therefore, if you calculate 20% of £300, we get a figure of £60. If you take this £60 tax relief from the previous calculation, we calculate at a tax bill of £44 for a 20% taxpayer and a bill of £148 for a 40% taxpayer. As you can see, there is no change to the charge experienced by a 20% taxpayer pre Section 24 and post Section 24. However, if you are a 40% taxpayer, these changes impact you by a 60% increase on your tax bill per property. Section 24 does not apply to limited companies, and tax is still determined as per my description pre Section 24. That's why one of the reasons why we invest in a company. However, there are associated costs to consider when purchasing in a limited company, and therefore we would always advise speaking to a specialist tax consultant or accountant, as everyone's situation differs. Thank you for taking the time to watch this short video. As always, please feel free to reach out to myself or Kyle for further information about property investing, or look at our Facebook page for useful property content posted daily. Thank you, and see you again soon.